Hi, Trent. I'm going to make you the presenter. Looking forward to talking to you. Passing you the baton, my friend. Looking forward to hearing your voice. Not sure if you want to use a screen share, and we prep the community for questions. So stick around for questions with Trent.
Yeah. Hi, Dale. How's it going?
Good, Trent. So nice to finally be able to talk to you. All we've done is we've been pen pals on Skype for a few months. So, you know, I'm not a millennial. In fact, I gave up my cell phone because I got very tired of texting, and I like the human voice as far as knowing inflections, all the miscommunications that people read into text. But great to have you with us today, Trent. And I'd like to say that what really impressed me, and I'm sure I'm going to learn from you today about the industry and different types of brokers, but you had to cancel our last interview because of all the hurricanes in Florida. And what was very beautiful was you weren't only concerned with your own butt, you were out there helping your neighbors board up their windows before the hurricane. And to me, that's a giving spirit. It's unusual in this industry filled with sharks and barracuda that only think about me, me, me. So great that you were out there helping others, buddy, because that's what we try to do here.
Thanks. Yeah, it was definitely interesting times. It was the first hurricane I've ever been through. I would like to not go through another one.
And I hope it's your last one, Trent.
Yeah, me too. Unfortunately, I don't think that's going to be the case in South Florida.
Yeah. So Trent, you know, I usually like to start with, how did you end up in this game? What was it like for you early on? What was your first gig? Who introduced you, opened doors? And tell us a little bit about the beginning of your journey.
Yeah, certainly. So I got into the industry through my brothers. I had two brothers that were futures prop traders for a large firm in Chicago. Okay. And that firm specifically, this was back in the day when they only hired athletes. So I was an athlete in college. When I was coming out of college, my brother's like, oh, come up, interview, see if it's the right fit for you. So I went up there and I actually watched my brothers trade for the first time. This was back in 2006, 2007. And I watched them trade, and I just remember being completely blown away by the industry. At the time, they were trading Henry Hub Nat gas. It's when it had that large increase. Before, I think it's like $2 now or $3, but this was back when it was like $12 to $13. But I was just sitting there watching, like, you watch somebody make or lose a lot of money, it becomes pretty fascinating pretty quickly. So yeah, I went up, I interviewed, did a few rounds of it, and thankfully they thought I was a good fit, and they hired me on in their rookie class. And as mentioned, it was all athletes at that time. So my rookie class consisted of four people. I was a D1 track athlete. Then we had a D1 football player from Boston College, a D1 golfer from Loyola in Chicago, and then a D2 basketball player. And that's the stereotypical person they hired back then. Things have certainly changed.
What was the rationale, the competitive spirit? And are you a Chicago native, Trent?
So I'm from Central Illinois originally, a small farm town outside of Peoria. Their rationale was the competitive nature. They tried to actually hire taller people back then because this was right before they switched to completely on-screen trading.
Okay, because they still had open outcry and people threw elbows in the pit.
Yeah, right? That's Yep, I was actually the first rookie class that ultimately did not go to the pits. We were scheduled to, and then they just made the change because things weren't going well from the pits. So they made the change to where we would only learn on screen.
It's too bad. It's too bad. It was a blast. I can tell you from having been at the old Merc under Union Station, which turned into the Mid-Am, but it really was a great place to learn from. All the guys on the floor. It was really an unusual and great time for me. So you made the transition and you started trading off the floor.
Yeah, so exactly. So we started trading on screen. It was a good process. I would say there's a reason why they were one of the top prop firms in Chicago, because they put you through a 6-month education program where I learned everything about futures and options. And I mean, prior to that, I wasn't a business major in college. I was history and poli-sci, so I knew really not a lot about the financial industry.
I spent quite a few weekends in Champaign. So, maybe, yeah, I'm a lot older than you, but, I stumbled around downtown Champaign. So what a great campus.
Yeah, it's a very, very country campus. So a lot of cornfields, a lot of pig farms.
Oh yeah, I was in DeKalb, a lot of cornfields there too as well. So, so you went out there, you started to trade. Blake was on a little earlier, and I think it's really admirable, because I don't think trading is for everybody, and a lot of people, their egos won't let them accept that they may have more talent or enjoy different aspects of the industry. How did you come to that revelation?
Yep, that's an excellent question. So I traded for just under 3 years. I was 100% commission based, so very much eat what you kill. And for the first 2.5 years, it was great. I didn't have a losing month for the 2.5 years. And then all of a sudden I had 4 losing months in a row. And it wasn't, so I went back and started reflecting. I'm like, where am I losing money at? And by the time I covered my $4,500 desk fee and all the commissions to trade, that's where I was losing money. It wasn't actually in the markets. I was making money when it came to tick for tick in the market, but I was losing money.
That's a hell of a desk fee. I hope it was mahogany.
We had a nice office.
Yeah.
It was, but we had every amenity you could think of. We had a live squawker in the floor with us.
Oh yeah,
so
I remember those.
50-year traders, and one guy was designated. He watched the Bloomberg terminal. He watched Reuters. He watched Dow. He watched all these different services, and he squawked to you. And it was really unique in the sense that he would actually tell you to buy or sell. So he would say a piece of news event came out. He's like, sell S&P. And everybody would just click, because it was really before the automated systems got in there. So this is what you needed, basically somebody to analyze it for you just so you could click the button. So that was really unique. But so going back, I quickly realized that I don't have the emotional capacity to trade full time, to say it lightly. I did not handle the drawdown very well. I just wasn't accustomed to losing, because I hadn't at that point. And when it started, I just didn't really know how to stop it. So it started making me explore the different sides of the industry, which is what led me into the brokerage side of the business, which is where I've been at since 2012.
Okay, so you made the transition. You recognized something that you're basically, it made you unhappy. And we all want to be happy with what we do every day when we get up, don't we?
Yeah, I couldn't agree more.
Instead of so
it was more the stress factor.
Hard to be happy when you're stressed out all the time, in my opinion.
I agree. I am still, to this day, I'm so impressed with people that can trade full time. I think it's an amazing feat, and it's very underappreciated. It's not even from just the financial standpoint. Like, sure, you can go out and you can make $100,000, $200,000 a year trading full time, but just dealing with the stress of it during that period of time, I think, is the most difficult part.
Okay, so tell us about your next step.
Yeah, so after I traded, I started looking at the different sides of the business, and like I said, once I factored in commissions, I realized I was paying a heck of a lot of money in commissions. I'm like, all right, well, that's a natural progression. I had a lot of friends that had switched from being traders to more of an operations guy on the brokerage side or the clearing firms, and then ultimately I was sort of over futures at that time, and that led me into actually getting into the Forex market. I had a mutual friend acquaintance that was friends with the guys at Forex, and they made an introduction, and thankfully the guys over there thought I was a good fit, and they hired me on to head their institutional sales for Forex, which was an ASIC regulated brokerage firm at the time. Now they've since become ASIC and FCA regulated. But yeah, so I headed their institutional sales, which primarily consisted of working with IBs, white labels, so somewhat affiliates, money managers, people of that nature.
Okay. So you have a lot of experience. That was your first, you're not still with them, are you?
No, I'm not. Yeah. So yeah, I definitely have a unique background in the industry.
Okay. Tell us what's unique about it, and explain the different regulatory bodies, because you know, like Blake was saying today, it's not only how you trade, it's also so critical where you trade, where you domicile money, how much money you can feel comfortable leaving on the books, and the regulators and the protections. Because in the old days, if you had an account with the clearing member firm of the Merc or the Board of Trade, if they went down, the exchange guaranteed the funds, even all the way to Stotler. I don't know if you were around then. But then you had a lot of non-guaranteed IBs that if they went down, you lost your money. So why don't you tell us some of the important ingredients of what people should consider when they're selecting a broker?
Mm-hmm. That's an excellent question, because that's literally what I do all day, every day now, is help clients select brokers and choose the right brokerage firm for their trading account. I actually help the guys at ForexAnalytix. You guys might recognize my name for those listening in. I run the subscription reimbursement program, the support side of things, where I help people get set up at the various brokerage firms, and then help them actually save money off their subscription at ForexAnalytix, which is a great program that the guys over there came up with. I think it's incredible what you guys do, and you guys are truly trying to help people, and it's evident through these various programs that you guys run and different offerings that you guys have. But yeah, as you mentioned, Dale, and as Blake mentioned earlier, it is very important to make sure that you are choosing the right brokerage firm for your trading account. Unlike on-exchange products, off-exchange has a host of variables that a lot of people just don't consider, because when they're coming into the industry, they just don't know a lot about it.
Are you talking about CFDs?
I'm talking about spot retail Forex, CFDs, any FX related product, which is just different from a futures because it's off exchange. So the regulation's different, the platforms are different, the execution style that a broker does with your trades is different, the commissions, the spreads, they're all different. There's all these variables that go in that make it a very unique industry, because every single broker essentially has a different offering, and not one broker is the exact same. So it definitely can make it challenging for a new trader coming in and trying to navigate the waters. And what we've found is, left up to their own devices, a new trader typically will go to Google, they'll search best Forex broker, and whatever pops up first, which is generally the broker that spends the most money on advertising, is the broker that they go with, which is not always the best case, because it might not fit their particular trading style.
So you brought it up, Trent. What exactly happens with the reimbursement program?
Yeah, certainly. So the reimbursement program is, if you open your trading account through one of the partner brokers, which there's about 12 of them on the website right now, they're all regulated and reputable. They're all either ASIC, FCA, IROC in Canada, regulated brokers. But if you open up one of your accounts and sync it to the program, you receive $1 back for every one standard lot you trade towards your subscription program, or your subscription to ForexAnalytix. So say if you're paying $89 a month for the top tier program, and you trade 89 lots that month, you essentially paid for your subscription, and it would be free that month, doing what you otherwise would be doing. You're going to apply the knowledge you're learning from ForexAnalytix someplace, you might as well apply it and get the reimbursement.
What a great concept.
Yeah,
So,
it's something Blake and the Steves came up with. I thought it was an excellent idea.
So why don't you tell us a little bit about, say, for example, brokers that are regulated in Cyprus? What do you tell people that are considering opening an account with brokers that are there? I know there's even, Cyprus probably looks like a Cadillac compared to a lot of brokers are in Belize. I don't know what the regulatory agency is in Belize, but there are all kinds of unusual domiciles for brokers. What are your top three to avoid?
Well, just going back, I think ultimately it comes down to the people running the brokerage firm. I mean, evil can still prevail even in a regulated jurisdiction. Yeah. It's just much more difficult to do so because
you mean like Russ Wassendorf?
That's a prime example. Yes.
Okay.
PFG was a very prime example to where they were in an extremely heavily regulated environment, and he was still able to get away with it for 20 plus years. So evil still can prevail.
Right.
But the reason why regulation is there is ultimately to benefit the client and the end trader. Where some of these lesser regulated jurisdictions like Cyprus, Belize, like you mentioned, BVI, there's a reason why you see so many brokerage firms there, and it's because it's easy to get regulated, which ultimately means there's not a lot of oversight to assure that they're providing fair conditions for your account. So yeah, we try to avoid working with brokers that are out of there. I think the only one that we really do work with is FX Pro, but they also have the F.A.C.E regulated entity, which is where the vast majority of our clients are at. But
interesting.
We've been out to their office and met the guys.
Okay, are there different rules for these brokers as far as segregated funds compared to pooling them, and even though it may show up as an individual account, they're really not segregated?
Yes, that's correct. So a big thing right now that's actually going through in Australia in 2018 is brokers will no longer be allowed to use client deposits for margin purposes at their liquidity provider. So a lot of people don't know that that's actually the case. So when you deposit money with an Australian broker right now, your money goes into one client trust account. So all clients at that brokerage firm have their money there. And then currently the broker can take 50%, up to 50% of that money and give it to the liquidity provider where they're offsetting your trades.
So they're using client money to meet their cap requirements instead of their own money.
Not their cap requirements. No, that's separate. So the cap requirement is considered their operating capital, which is separate from client money. So they can't use any client money to run their business. So they can't pay for their office space. They can't meet their net cap requirements with client money. But what they can do is they can currently put money with their liquidity provider. So say they're PBN through like a Deutsche Bank. They could send up to 50% of client money to Deutsche Bank in order to execute the client trades there. ASIC wants to crack down on that practice. So what they did is they're preventing that procedure where the broker is going to have to take their operating capital that's away from client money and send it to the LP to offset trades. So now, in essence,
probably eliminate quite a few FX brokers in Australia that do not have that type of liquidity.
I guarantee it's going to happen. A lot of them are going to go by the wayside because they can't afford to put their own money up. But it's a good thing for the client because now when you deposit with the broker, your money sits at that brokerage firm in that client trust account and cannot be touched.
Okay. Can you touch upon the difference between different brokers? That some are ECN, some can trade against you. I'm far from an expert on trading desks or trading operation business models, and which would be more in favor of the retail trader and which would be more out of favor for the retail trade?
Yeah, certainly. So there's really two buckets of execution style, even though you might hear a bunch of fancy names like ECN or STP, but there's really two styles. There's either a market making broker or there's an STP broker, which means straight through processing. The market making is similar to what it sounds like. They are the counterparty to every single one of your trades, and they take the other side. That doesn't mean they're not offsetting your trade in the market. So a lot of brokers will take all client trades in, and then they'll run their they call it a book based off the aggregate position that they have. So say all clients come in Euro USD, and now they have 10 million net long of Euro USD, but they don't want 10 million, they want 5 million. They'll go offset 5 million of it. So they're not trading one for one against every single client. That's not to say some don't do that, but a lot of them run it as a total book. On the other side, you have the STP model, which is straight through processing. A lot of brokers will call it ECN as well. ECN basically just means that you're getting the raw spread from the liquidity provider, and then they charge a commission on top of that. So typically it's like $7 per 100K round turn. But STP just means they are not taking the other side. So when you execute a one lot, they in turn execute the same one lot at the liquidity provider. In terms of, oh yeah, go ahead.
Trent, can I ask you a question out of curiosity? First of all, we have some questions for our friends participating here, and we have two questions. And I think anybody else that has questions for Trent, I mean, he's your go-to guy to answer all that. I mean, he's in the industry. Yeah, they just became 4 questions. But I want to ask you a question. Do brokers build some kind of a database saying that these are the well-performing clients? They are most of the times making the proper trades, and these are the clients that are usually trading badly. So let's form an algorithm that says, I'm going to execute proprietary somehow on the side, what the group A does or against what the group B does. And when I say against, I mean still proprietary trading, but by using the statistical data from the client base, which is quite significant. I mean, if you're a big broker that has thousands of clients, the statistical results you can draw out of that are extremely valuable, right?
Yeah, I certainly think that goes on. It definitely goes on in market making brokers where they do analyze. They analyze every trade, and if you're a profitable trader, they'll put you into bucket A, and they'll just STP all your trades off to another counterparty. If you're an unprofitable trader, they might elect to take the other side of your trade, whether it's on a one-to-one basis or it's on an aggregate of the overall positions.
Okay, it makes sense. So that's not illegal in any way, right?
So it depends. In some jurisdictions, it depends what type of license you have. So in Cyprus and the F.A.C.E, for example, there's 2 different licenses. You have a market making license and you have an STP or matched principal only license. So it's important to know what your broker has or which type of license they have.
Great input.
Australia just has 1 license.
Nice.
Okay.
You want to transfer the questions, or you want me to do it?
No, go ahead, Steve. Go ahead,
okay,
buddy.
Tom is asking, how and where can I trade the CFDs from the US? I currently trade Oanda US. That's the question from Tom.
If you're in the United States, unfortunately, you cannot trade CFDs. The regulators have prevented it because they want you to trade those products on exchange. So unfortunately, you'd have to trade the futures markets in order to trade different indices or the commodities.
And that also applies, he didn't ask that, but I'm extending the question. That also applies since he's a US citizen, even if he tries to get an account with a European brokerage firm, he's going to get the same restriction.
He's not going to be able to open an account with the European broker.
Okay.
So the CFTC, through the Dodd-Frank Act, they've made it illegal for a broker that's not regulated by this CFTC.
So nobody's going to accept the business.
I think you got the
only
question wrong. I think that Tom is not from the U.S., but he has an account.
I trade the CFDs from the USA. I currently
but
trade.
I believe okay. He's not from the U.S. that has a U.S. account with Oanda, and he wants to know why he can't trade the CFDs from the USA.
Okay, if that's the case, and he's not a U.S. citizen, I guess then he can do something else, right, Trent?
Yeah, correct. So I would recommend him opening an account with Oanda through the UK entity, which would then give him the ability. The reason why he's not enabled to trade the CFDs is because his account is held with Oanda US.
Oh, okay. I was wrong. He's in Michigan. All right.
Okay. Dale asked him about IB, unless I missed it, Michael says.
Interactive brokers?
I'm guessing yes.
What about them? Yeah.
I think they are actually a good firm. The reason why we don't particularly work with them is because they require us to mark up the cost in order to get paid, which goes against all of our principle. We try to reduce the cost of trading for clients. So where a lot of brokers in this industry, they'll give the price to every client. So say their euro price is 1.3 pips. They're going to give that to a client regardless of whether they're working with us or if you go into them directly. The only difference is if we send the client to them, they might give us 0.4, 0.5 of that 1.3. Which
so in essence, it makes it, working with them would make it, instead of making it better for your clients, would make it more expensive.
That's
right?
correct. Yep.
Yeah.
That's the reason why we don't work with them.
All right. Here's a great question from John Woo. Brett, what's your view on trading currency futures versus trading retail FX?
That's a good
Which
question.
would be better? Yeah.
I think it ultimately depends on the type of trader you are. So I actually did trade a lot of euro futures when I traded. I actually found it to be a rather difficult market to trade. And then when I switched over to spot FX, I trade the Euro USD, which I found much easier to trade.
Okay.
Typically speaking, I think if you're actually an active trader, it's going to be cheaper to trade the spot FX. And FXCM actually did a lot of studies on this back in 2013, I believe, or 2014, and they did the study and gave it to the NFA, where they proved that it was cheaper to trade the spot FX market with them versus going to the future side of the industry.
Also, you would have more liquidity to trade after the U.S. exchanges, the CME, which trades IMM currencies. Their aftermarkets aren't as liquid as spot markets.
Yep, that was going to be my next point. I think then if you're a larger trader, if you're trying to get off 5 to 10 lots, I think you're better off trading the spot FX market, or if you're trading more than that, because ultimately the futures just doesn't have as much liquidity as retail FX, and they can't be customizable. So if you're a really large trader, say you're needed to trade 100, 200 lots a trade, or 10 to 20 million a click, you cannot do that in the futures market. You'd sweep the book. They would stuff that price so far against you. Where in the spot FX market, you can actually do that. You can go to your broker. I know Oanda guarantees a fill up to 10 million at the price they're showing. So yeah, the liquidity is definitely deeper in spot FX.
Saeed is asking, hi everybody, I have a question about brokers' earnings. I believe most of them are closed markets, even STP regulated brokers. Could you explain to me your knowledge about this, please?
I'm not. So he's saying, when he says closed markets, he's asking if they're just taking the other side of their trade, even if they're claiming their STP.
I'm not sure. Can you clarify, Said? I'm going to go to the next question until he clarifies. Okay. Andy is asking, what happens when a broker does a look back on an order and fails to fill that order?
That's a good question. So typically it's not the broker doing the look back, it is the LP for that broker, and ultimately what happens after that comes down to the broker and the client on a one-off or individual level basis. So for those that don't know what look back is, basically in the OTC markets, liquidity providers and banks still have the option to cancel a trade after it's already been executed. And they have, most cases, they have up to 24 hours to tell the broker that they canceled it. So it's very rare that it happens now, but you might get filled on, let's say, a one lot of USD, and then an hour later, the LP is like, no, I don't want that trade. I don't want that trade. They cancel that order, and now that's when the broker can either honor your trade and just eat the difference, or they come back to you and they're like, hey, we have to cancel your trade because we got it canceled by our LP. There's actually a big fight right now in the industry. I was reading today, Alpara US is going after all these banks because of this last look practice, because they were essentially eating every single trade and not passing the cost on to their clients. So they lost substantial amounts of money because of this practice. So ultimately, I think it's going to go away in the industry. I don't see how it can survive. Brokers hate it, retail traders hate it. The only ones that are actually winning are banks, which are losing a lot of the flow anyway to more prime of prime brokers that are acting as counterparties.
Good.
Okay, very nice. By the way, Fernando is asking a question which is actually quite interesting. He says, what about those US clients with dual or triple citizenship? Can an account be opened in the UK or another locality?
If you can prove residency outside of the United States, you can open an account with an international broker. It's based on where you reside versus what your citizenship is. So if you reside in the United States, then no.
Okay, so it has to do, then if you have multiple citizenships, it has to do with proving that your permanent residence is outside the US, correct?
Yep, correct.
Okay, Luca is asking, is there a ticket size in the most liquid pair that will put you on the radar screen of the big market makers, meaning they'll come after you and hand you down?
No, that's not the case. The only time I would ever say that that's the case is if you are a news trader, which every single broker and liquidity provider deems as toxic flow. So if you go, and what I mean by that is if you execute a trade within the second a news event comes out, that's when you're going to get flagged, because ultimately it's detrimental to the broker. On many different levels, and we could have an entire webinar on that. But ultimately, that's really the only thing that ever flags a trader as maybe somebody that broker just doesn't want as a client because it's harming their business. So yeah, it doesn't come down to ticket size. It's more if you're just trading around news.
Okay.
Which leads to the next question from Andy.
No, before that, Said confirmed that your assumption on his question was correct. The one he says that I believe most of them are closed markets, even STP regulated broker. Could you explain to me, your knowledge about this? Yep. So you make an assumption. He says, yes, please.
So that's not the case. And the reason being is Cyprus and the F.A.C.E and these regulatory bodies distinguish the difference in terms of the licenses. So if somebody has an STP only license, they have to match off every single trade that comes into their platform with an other liquidity provider counterparty within a certain period of time. I think it's a couple seconds. And if they're not, they get flagged and they come and get a big fine. So in those places, they can't. There are some places where they can still do that, but you see, and you could see with F.A.C.E tried to do that in the United States, where they claimed to be STP, and they were, but they were essentially what the NFA said was they were STPing trades to another firm that they had a financial stake in, and you saw how they got shut down and kicked out of the United States rather quickly once it came to light what they were doing. So yeah, I don't think that really happens anymore.
Speaking of F.A.C.E, Andy mentions it, saying on BOE September 8 decision, F.A.C.E refused to fill my pound-dollar long, so I'm looking to change broker. Thanks. He's just mentioning that. Can they actually do that?
They refuse to fill it. I would want to see the trade in the journal. So if it's on MT4, I would want to see the journal around that time. So if he wants to send an email to brokers@forexanalytix.com. I'd be more than happy to take a look at the trade and see if there's anything I could do to help.
Okay, well, you know.
I'm writing down the email you mentioned to him.
Okay. Trent, I, for one, am very happy, and I'm sure I'm not the only one, that you gave up just being a trader for yourself. Okay, because you are helping so many more people by educating them about what you discussed today, and exponentially you're helping so many more people than you would have been as an individual trader. So
yeah, being a trader, you pretty much just help yourself and who's ever backing you financially.
So, you know, maybe it wasn't your nature to be, you know, just about me. And that could have been another reason that led you to what you're doing now, because I learned a lot from you today. And I want to thank you for your time today and edifying our community. I want to thank you for your help in developing the reimbursement program to help our clients, our subscribers pay for the service. And it was really great to meet you and hear your voice and talk to you today. Well, I can't call you my trading warrior brother, but you're a warrior for you're a warrior for the people that really need to be educated about all the different aspects of the broker industry. And we do appreciate you being here today, Trent.
Yeah, I appreciate it. Thanks for having me on. I hope the information I gave was helpful. If anybody has any questions after this that didn't get answered, feel free to email us at brokers@forexanalytix.com, and I would be more than happy to answer them for you. And then obviously go sign up for the subscription reimbursement program.
That's what I want to say. It's a good opportunity to say that all our clients that are not located in the US are eligible to participate in that, correct?
Yeah, correct. So unfortunately, due to regulations, we can't offer the program to United States citizens, but everywhere else in the world, we can facilitate.
Well, maybe Donald, our president, Donald, make FX trading great again in the U.S.
If he rolls back Dodd-Frank, it certainly will.
Okay,
hey guys, hey Dale, can you hear me?
Yeah.
Hey Trent, how's it going? I got a chance to listen. I got a chance to listen to most of your interview, and it was great. Great information. I told people early this morning, you got to stick around for Trent, so hopefully they have. And remember, even if you're not European based, if you're US based, but you need some assistance, don't hesitate. Email brokers@forexanalytix.com and get a hold of Trent, and I'm sure he can help you, or help at least point you in the right direction. Is that correct?
Yeah, certainly. Yeah, don't hesitate to contact us anytime. Just because we can't work with the program doesn't mean we can't help you out.
Yeah. So great.
Yeah, if Brent can't, I don't think anyone can, Blake.
Right, Trent is he's very knowledgeable on this side of the industry, and we're glad to be partners with you. So thank you very much for your time.
Likewise, thanks, Blake.
All right, have a great weekend, Trent. Steve, have a great weekend. Blake, F.A.C.E, everyone have a great weekend. Do your work over the weekend, and remember, don't just count your pips, count your blessings, and we'll kill it next week. Adios. Thanks again, Trent.